All right. Good evening, everyone. Welcome to our live sharing session for this evening. So, first of all, let me reveal to everyone today that I am extremely happy. I would even say I'm a little bit excited. Now, why am I feeling this way? Some of you may have already guessed it. It must be related to the first phase of the competition with our Asia Pacific headquarters. I am thrilled because we have definitely achieved good results in our India region. Now, even before the live session, I have been contemplating whether to share this good news with everyone right from the start. But then I thought it would be better to wait until the end of the session to provide the detailed information about this great news. Now, I don't want to prolong the sharing or delay anyone's learning time. And good things are always saved for the last, am I right? The achievements we have made are the best and most precious to me. However, at this point, I definitely want to thank everyone for their great support. Whatever achievements we have made, they are all the results of everybody's support. So once again, I sincerely thank you all. Now, without any more further delays, let's go straight into sharing the content of tonight with everybody. Okay, so what specific content do we want to share with everyone this evening? So first, a review of the market trends and the analysis is definitely going to be necessary, including the sharing of major news and updates every day. Now, those two are always going to be a given. Since we started the activities of our competition in Asia Pacific region headquarters, we have been using asset management accounts for trading. So what are the advantages of these asset management accounts? Why are we able to gain these stable profits even in this volatile market? So I'll share these in more details with you shortly. We have previously learned some experiences or rules that have been passed down from Wall Street. So tonight, I am preparing to continue sharing some content on experimental concepts with you all. This is called the Zerich Speculation Law. In fact, these things only make sense when connected to our actual trading and real profit. If it is just a theory and gossip or talk, it has no meaning, it bears no weight, and it won't lead to any profit. Okay, so these are the order that we're going to be going. We will wrap up with the stock analysis for this evening. Okay, so on to market analysis, the market recap. So let's take a look at today's market trends. Needless to say, for most people, today's market is a bit thrilling. The Nifty index fell by 1.5% today, while the Sensex index dropped by 1.42% today. This decline is said to be quite significant. Now, out of the 50 stocks in the Nifty 50 index, only 7 stocks remained in the green, while the rest of them are in red. So, it can be said that the breadth of the stock decline today is quite large. The current Indian market is facing greater challenge. So what caused such a sharp drop in the stock market today? So this is what we're going to dive into more details. So let's take a look at the technical chart of the Nifty 50 index. When you look at this chart, the idea or viewpoint is already very clear. Why? The obvious downtrend to the uptrend trend line, which can also be called our support line. But this support line, does it really support the price? Now, of course, if it can hold, then it's what a support line is supposed to do. Otherwise, it's not going to be a support. Now, from my personal point of view, the upward trend line itself does not have a certain supportive effect. However, due to the sharp decline in the index today, such a candlestick chart of decline often has downward inertia. This means that it is likely that this support line will be broken downward tomorrow. So how much can it fall and how it will ultimately perform is currently difficult to determine. So why did the Indian stock market experience such a big breakdown today? Now, in fact, several main unfavorable factors I have already mentioned to you one after another. Now, first, the imminent uncertainty of the elections. Analysts believe that the market has already factored in the victory of the Bharatiya Janata Party New Democratic Alliance in the Lok Sabha elections. However, the lower voter turnout has raised doubts about the expected number of seats for the Bharatiya Janata Party. Second, no significant surprises in the quarter 4 of 2024 earnings season failed to stimulate additional buying activity on the Wall Street. Now, the third thing, Nifty 50 option contracts expiring weekly led to increased market volatility as traders bought and sold underlying assets to manage their derivative positions. And then lastly, recent continuous selling by foreign institutional investors, so our FIIs, has also left the market extremely anxious. Since May, FIIs have been selling off, totaling 15,863.14 million in stocks in just a few trading days. Now, all of these factors have ultimately coalesced into a significant bearish force. That is what is leading to this sharp decline. So let's take a look at the Sensex index. So today the index has also fallen below the upward trend line, following a trend similar to that of the Nifty 50 index. Of course, I am referring only to today's chart and the intraday movements. As for the reason for the decline, they include factors such as ongoing elections, weak performance in the fourth quarter, rising oil prices, so etc. We explained it on the Nifty. Pretty much similar situation here on the Sensex. So from the current trend, the market situation is still quite severe. Although the two indices have not yet broken below the upper trend line, if they do break, it will happen very, very quickly. Even a slight drop tomorrow could breach the trend line. Now, personally, I think discussing this now is quite meaningless. Today's decline is the result of various factors converging, and it has a certain degree of persistence. It's Thursday today with just one more trading day to close the week. You can take a look at the weekly candlestick chart, which shows a significant downward candlestick. Now, regardless how the market performs in the remaining trading day, it won't have much impact on the weekly candlestick chart during closing time. So based on the weekly perspective, we can predict that the next week will still be mainly characterized by declines. As I've mentioned before, the current market conditions are severe for trading in ordinary stocks, not to mention poor profit effects. Even being able to maintain costs is considered quite fortunate at this moment. So it is undeniable that the stocks we previously recommended have also been affected by the market and experienced a certain degree of decline. However, my friends, please rest assured and don't be overly anxious. On the one side, in a market with poor conditions, it's normal for some stocks to be trapped. And then on the other side, as I've always said, if you have incurred losses from buying these stocks that I recommended, I will take responsibility and help everyone recover together. Okay, so that is the shape of our indexes. So we're going to be diving into some news now. Okay, so we just conducted the review on the Indian stock market, shared my opinions and my viewpoints. We've also discussed our expectations and response strategies moving forward with everyone. Next, we are still concerned with domestic and international markets. What major financial news or economic data are closely related to our stock market. So actually, the news content to be shared today can be said to be leaning towards the positive side. While some are not so good, some are great. Here I want to tell everyone that when collecting important data or financial news, we must be objective. We cannot only focus on the positive aspects and neglect the negative aspects. Of course, the importance of these contents also needs to be prioritized. The more significant they are, the more attention they should be given. Now, for example, the earlier conflict between Iran and Israel is actually considered negative content. But we still need to analyze and still need to share it. After all, it is an important international event, and the short-term impact is also significant. So we must pay attention to it. Why aren't we talking about it now? Why aren't we discussing the conflicts in the Middle East anymore? Now, it's because it has become a daily occurrence, just like the Russia-Ukraine war initially, which is still ongoing. But does it have any impact on the global financial system at this moment? Basically, not too much impact. Okay, so let's continue. Our first piece of news, let's take a look at the inflation situation in India. Now, Reuters survey shows that India's inflation rate may increase in April. So economists surveyed by Reuters say that due to the persistently high food inflation, consumer price inflation in India in April may have fallen to 4.8%, slightly lower than the level in March, which was 4.85% based on the March 2024 data. Now, despite a slight easing in overall inflation over the past few months, as shown in this chart, nearly half of the basket of goods in the consumer price index is still at high levels. So that's putting a lot of pressure on household budgets. The Reserve Bank of India's latest announcement states that as some regions of the country are experiencing heat waves, food prices continue to pose additional risks to India's inflation trajectory. Now, the chief economic advisor to the government of India, Ananta Nageswaran, stated on Wednesday that India is now more capable than before of pursuing growth that is non-inflationary. Now, another survey by Reuters indicates that inflation is expected to return to the Reserve Bank of India's midterm target of 4% in the next quarter, with the central bank expected to cut interest rates in the same quarter. So that's going to look very positive. If we lower the inflation rate and we cut rates, that is going to open up a lot more funds. It's going to open up a lot more people's budgets, right? However, India's robust economic growth rate, 8.4% in October to December quarter, and expectations of the Federal Reserve delaying its first rate cut could lead the Reserve Bank of India, the RBI, to relax its monetary policy later. Now, some economists believe that due to India's unusually strong economic growth and the central bank's focus on overall inflation, we expect the bank to announce its first rate cut in the fourth quarter of 2024. Although we do not rule out the possibility of further postponing the decision until 2025. So how should we interpret this news? We all know that rate cut is positive for the stock market. However, delaying the rate cut is not too friendly for the short-term performance of the stock market. So therefore, based on this point alone, we can expect that the Indian stock market may face pressure in the short term. But in the long term, there should be no issues. So the key thing here is that for the vast majority of investors in the market, it can be tough to endure the short term. Do you agree with me? All right, so let's take a look at another piece of news that belongs to long-term good news. India's GDP growth rate for the 2024 fiscal year is very likely to reach 8%. Remember, last time we were talking about 6.7%. Now we're expected to hit 8%. So again, the chief economic advisor of the government stated that India's economic growth for the fiscal year of 2024 is very likely to reach 8%. Now, this kind of economic growth is definitely good news. Even though it's just a forecast, however, the significance is much greater when the forecast is made by the chief economic advisor of the government. Now, Nageswaran mentioned that he would be very happy if India's gross domestic product, or GDP, could reach a level of 9.5 to 10%, which is similar to China. However, the background has already changed. So Nageswaran has previously stated that India's continued outstanding performance has given international organizations reason to raise their forecast for India's potential growth rate to 7% or even higher. India's GDP for December quarter grew by 8.4%. That's the highest in 6 quarters. The last time India experienced faster growth was in the first quarter of 2022 to 2023 when it grew by 13.1%, which has now been revised down to 12.8%. Now, these are big numbers when we talk about GDP. That's the whole as a country, right? The growth in the third quarter was driven by double-digit growth in the manufacturing sector, with the construction sector, and following closely with the growth of 9.5%. Now, we've always said that stock market is a barometer of the economy. Therefore, isn't long-term high-speed economic growth in India precisely what provides us the momentum for long-term rise in the stock market? Now, this is going to come into question, right? So, of course, there are currently some discordant factors in the market. For example, there are reports that government is evaluating a draft rule for the Reserve Bank of India, which tightens the norms of infrastructure project loans by requiring higher provisioning for such projects. Now, Nageswaran declined to comment on the Reserve Bank of India's project financing guidelines, stating that it's just a proposal draft. So these are just drafts. It hasn't come into play yet. It's still uncertain, right? So in fact, there's been quite a lot of recent news about Indian banking sector. This is also the reason behind the recent continuous decline of the Nifty Bank Index. Now, let's take a closer look at this next piece, okay? India Cent Bank asks non-banks to stick to loan cash payout limit. That is interesting. So, actually, the collection of Indian banking related news I don't have here is not very comprehensive. But in terms of timeliness and importance, I believe it is enough. So first, the Reserve Bank of India has asked non-banking institutions to comply with cash loan payment limits. On Wednesday, the Indian Central Bank issued 3 warnings to some non-banking loan institutions not to issue cash loans exceeding the permitted limit of 20,000 rupees, which is about $240 USD. They may stop paying large amounts of cash to those borrowing against gold. Secondly, the Reserve Bank of India stated on Wednesday that it held a meeting with stakeholders to discuss potential strategies to further expand the coverage of Unified Payments Interface, which is the UPI, the country's domestic payment system. So the new draft rules from the Reserve Bank of India have made bankers kind of nervous. So over the past 2 years, the Indian Central Bank has imposed strict penalties on many entities for violations and non-compliance. Now, the Reserve Bank of India has caused panic in the infrastructure finance sector, leading to significant drops in the stock prices of many private sector banks, so PSU banks, and the key infrastructure of non-banking financial companies like Power Finance Corp. So have you all been keeping an eye on the performance of the Nifty Bank Index? You probably should, right? Recently, the decline in this index has been one of the significant reasons dragging down the overall market. So currently, the impact of this draft rule from the central bank on the market has not disappeared, and the overall market or benchmark indices could be affected at any time. This is also why recently I've been advising everyone to be cautious in ordinary stock trading, not to expand blindly. As of now, our viewpoint on this matter remains unchanged. So it's times like these where it's very crucial to be investing in the stock market. So this is what's going to separate generally from the amateurs to the novice to the veterans, right? So if you can manage to not lose money, let's not even talk about gaining money. If we were to manage not to lose money, we are already beating the market, right? So in times like these, we must know how to shift our focus. We must find other methods. We must direct our attention and our capital elsewhere where we can make these profit, right? It doesn't matter if the market's going up, going down, somebody's winning. And that somebody should be us. So that is what's going to make the difference. Okay, so weekly profit. So just when the profit effect of ordinary trading in the Indian stock market was relatively poor, we have also started experimental trading using our asset management accounts. Now, of course, this is also our way of expressing gratitude for everyone's support in voting for us to compete for the Asia Pacific Regional Headquarters. So, how are our profits this week? I believe everyone knows it very well. Everyone, I just roughly calculated that our profits since the beginning of the week, and we have already reached about 24%. And the week is not even finished. We still have one more trading day. Now, if we consider that the block deals or the block trades purchased today will profit by at least 6% tomorrow, this will bring our profit for the week reaching 30% easily. Now, what do you think of such profit results? Do you underestimate the profit of a few points each day? Now, as long as there is stable income, how much can we earn in a month? So this is where you have to think. Like sometimes when we say we earn 3% here, 5% here, 7% here, by the time you wrap it all and you add it all up at the end of the week, we are sitting at a nice cushion of 25%. In the meantime, where are we going to invest in the market right now to get a 25% return? Now, if we did that for a month, how much can we earn in 2 months? So tell me, is there any problem with our overall wealth growth plan? Ultimately, achieving the profit rate of 500%. It's going to be absolutely no problem. Besides, we will have projects with even higher profit rates in the future. So making money is not the problem at all. Now, of course, at the beginning of this week, there may have been a few people who did not sell their stocks in time, may not have earned a 5% profit, or even had no profit at all. So even if we were to deduct this 5% from Monday as of now till now, we still have achieved a profit of 19%, which is almost 20% just this week alone. Considering the expected profit of tomorrow, we would have around, again, 25% to 30%. So just following simple arithmetic, a weekly 25% profit means 100% profit in 1 month. Now, of course, this is just simplistic calculations, right? The actual profit results should be much higher than this. As everyone knows, there is also another powerful tool, which is compounded interest. So we haven't even factored in compounding interest. So why can we still continue to make profits in a market where overall profitability is low. And many investors are even in a state of loss. It's because we have used asset management accounts, which are like super tools that is very helpful in achieving profits. Now, what are some of the advantages of the asset management accounts? Now, this has been quite a popular question. So, advantages of these asset management accounts, right? Now, regarding the advantages, last night and even before that, I have talked to everyone about some aspects of it, some contents about it, right? Of course, on the one hand, this is advanced tool that is not yet fully popular on the market. Many investors in the market are not aware of this account and its advantages. And then on the other hand, working with other strong institutions like us in all-around manner is also inseparable. So we got tools that regular people are not getting access to, and you also have the expertise. So, first of all, asset management accounts, also known as AMAs, are not something that everyone can have or get access to. They are usually open to high net worth individuals. Now, as everyone knows, in this society, only good resources are scarce and limited, open to a certain group of people in society. But now, why do we offer it to everyone? So firstly, we need to further expand our market share in India and the entire Asia Pacific region. Secondly, it is also a welfare and reward provided to everyone for this Asia Pacific headquarters selections activity. So the first point, quite simple, right? We give thanks. We want to expand our market share. So instead of doing marketing, this is sort of our marketing. We give everybody access to these things, and then we funnel everything together. So second point, asset management accounts have advantages that regular securities accounts cannot reach. For example, asset management accounts can buy shares in the market that regular security accounts cannot buy. And there are many types of these shares. For instance, we can currently buy stocks in the UC limit board due to the advantages of the asset management accounts. We can access block deals and block trades that we are currently using for profit, which regular securities also cannot access to. So, of course, asset management accounts are just a channel, a method of trading, cooperation between institutions, as well as mutual distribution and acquisition of these shares are going to be required. It is important to note that even if you use an asset management account, you cannot buy any stock you want or buy as much as you want because resources and stock quotas are limited. Since we are in the trial period, the shares and funds and quotas needed are relatively limited. So you may not feel this yet, but this is a topic for another day. Let's not discuss it here and now, but we will eventually. Now, during the activity period, if you can continue to make profits, then go ahead and we can earn as much as we possibly can. Okay, so we're going to share some content on this next part. So in the last few classes, last few sessions, we learned about some contents about Wall Street insights, and then we learned some interesting things from the stock god Warren Buffett himself. Now, some people liked it very much, while there are some people thought that those contents were a little bit off topic, as if they had nothing to do with the profitability or trading. But actually, everything in this live sharing class is all involving making profit, and it's all involving trading. So today, we're going to learn about the contents of the Zerich Law of speculation. So the Zerich speculation laws, right? These contents are also related to our trading. Of course, in fact, we don't care where the method or experiences comes from. As long as they can help our trading, we can learn from them. We need to have an open mind and attitude to accept any methods, experiences, and the skills in the market. Any methods and skills that are suitable for us can help us profit from trading. It needs to be studied seriously, and then it needs to be transformed into methods and skills that suits ourselves. So everybody's going to be a little bit different. We're going to have to learn and mold all of these things to what fits us. So I am here to share with you all, hoping that everyone can quickly improve themselves to seize more profit opportunities in the market and achieve rapid growth of their own personal wealth. Okay, so Zerich's Law 1, taking profits early. Now, this law mainly requires everyone to curb their greed. So we're trying to get rid of greed here. When trading stocks, greed may manifest as reluctance to sell when the stock prices continues to soar, out of fear or regret. Now, this means being afraid that after selling the stock, they continue to rise. Now, everyone has such experiences already. You sell a stock a little bit early and then you watch it some more and it continues to go up, right? Now, these situations sometimes cause great distress and you're going to lose sleep, or you're going to be constantly regretting and perhaps even mutter to yourselves that like, I shouldn't have sold it so early or sold it too early. We don't want to look in hindsight. We don't want to look at what could have happened before, right? So, just like the stocks we sold off yesterday, do you all remember? After we sold them, the stock price soared significantly later in the day. Now, some people here regretted selling a little bit too early, but I want to ask you, if the price had not risen but went the other way, wouldn't the profits have also decreased? So I need to explain one point very, very clearly to everyone here, that even though we participate in trading and operations of these stocks, we do not control the stocks, nor do we manipulate them. Our ultimate goal is to ensure a certain level of profit and stability. We are not out to make the last coin flying to the moon. We are not here to make the prices soar. At the same time, we must follow market rules, their laws, and their regulation. Do you understand this point? Now, there's a very popular saying in the stock market. Once you sell the stocks, do not bother about whether the price rises or falls. Think of it as it's dead. It's gone. You close the book on that stock. We move on, right? It doesn't matter whether, like, we close on a certain price. That's real price. That's the real cash in your hand. When we sell, that's it. Now, the operating principle is after buying stocks and holding them for a while, regardless of profit or loss, when you feel it's time to exit, you got to force yourself to do so. Then you relax and you completely stop worrying about the stock price movements. When trading in large volume, it's also important to lock in profits when it's time to exit and not concern yourself with subsequent market fluctuations. Now, here's a little good story, kind of like in regards to this. So there's a billionaire named Mark Cuban. He currently owns the basketball team of the Dallas Mavericks. Now, when the dot-com bubble, when the internet was first a thing, he had a bunch of Yahoo shares. And what he ended up doing is he exited his positions and he took in billions of dollars. But right after he sold, the price continued to soar. So his billions of dollars would have turned into tens of billions of dollars. But you know what happened after that? It all came crashing down. So that is not looking at what he could have gone or what he should have gone. He just, I'm going to exit my position, I'm going to collect my money, and that's it. So Of course, this principle doesn't apply to all trades. It's more suited to the specific scenarios of trading UC limit stocks and large scale stock transactions, such as the block deals that we're currently engaged in. So, how should one decide on the timing for profit taking in regular stock trading? The usual practice is to decide in advance the profit rate you aim to achieve. Once the target is reached, you exit immediately. So you go in with a plan. When it hits that marker, you get out. This law tells you to sell before the stock price peaks and not to expect the gods of fortune to continue to bless you, right? So as the stock market game doesn't have predefined start or end points, everything is dependent on personal decisions, making oneself their own judge. After the predetermined target is achieved, you have to sell immediately, even if the stock price continues to rise after exiting. You got to suppress any greed and do not let victory go to your head. And do not buy that stock again. So if you had a plan of earning about 6% on this specific stock, you get in and rather quickly it jumped to your target right away. You exit the position. Now, I know it's hard because a lot of people are going with momentum and things like that. But you had a strategy. You stuck to your strategy. It hit whatever you needed to hit. You must take your profits. That was your thesis. It was your predictions, right? Now, this law may not apply to everyone, and that's going to be okay. This is what learning is about. If something suits us, we learn from it. If not, we abandon it, and then we apply it to different areas that might help us. This itself is a learning method. So that is the beauty of the stock market. We could take all this information that we learn, and then we can hone in and sharpen what we like, what we don't like, which indicators we are more reliant on. Everybody's going to view things in a different light. Everybody's going to view things differently as well. There's no right or wrong. It's just what suits you and if it works or not. If it's not working, then you got to change, right? Okay, so everyone take a look. This is a classic example of us closing profits early. Whether it's trading UC limit stocks at the front or block trading now. We are all closing profits early. Even when trading stocks with those limit ups, there are some people who, because they do not close profits early, ended up losing profits instead. Now, of course, this is not your fault. Maybe a lot of new members are not familiar with our trading model and method, but that's okay. Once everyone becomes skilled, won't we all be able to earn more profit? Now, some people may feel that this kind of one-time profit is too little, hoping to make 30%, 50%, or even 100% in every stock trade. I want to let everybody know, achieving such profit margins is not impossible, and it's totally achievable. However, to make such high profit margins in a single trade is going to surely require a relatively longer holding period. So if we were to hold it for a long time, maybe we double our money. Now, regardless of the method used, the ultimate result we need is to earn more profits within a certain period of time. So we're on a time frame, right? So don't worry. Even though the current profit percentage per trade is not large, there will definitely be projects with high profit rates. So there's no need to be anxious. There's going to be other methods that we haven't introduced yet. We're going to save those for later on as well. But there are other opportunities that are going to come, and we can hit those 30, 50s, maybe 100, but we got to be patient. However, even so, isn't our expected profit for the week around 30%? So won't it be over 100% in just a month? So we got to think about it. How long would it take for you to make 100% profit when trading ordinary stocks? Let's not even talk about 100%. Let's talk about even if we were to gain 10%, 15% in the current volatile market right now. It's still going to be tough. So I can confidently say among the members here, even a large portion of the people have never made a profit exceeding 100% in a single trade. Okay, so this is going to bring us to our Zerich Law number 2. Human behavior is unpredictable, and the stock market is also unpredictable. So this tells us that human behavior, including financial markets such as the stock market, cannot be accurately predicted in the long run. It is important to note that is completely different from our usual market judgments. When we make predictions in trading, it is to better serve our transactions to address questions like what to do if it rises or it falls. This trading strategy deals with practical problems, and of course, we don't need more accurate predictions. So, the Law 2 is meant to convey that one should not believe in anyone's predictions and should not use them as a basis for engaging in stock speculation. So this is speculating in stocks, futures, contracts, things like that, right? And should not use, in the long run, this will not be effective. That's why I've been teaching everyone to learn various methods and experiences so that you can grow rapidly on your own. So that is very important. The reason why we want to learn about all these indicators, we want to learn about how to read these graphs, we want to learn how to look at different things and learn all these other theories, is so that we can make our own hypothesis. We can make our own thesis. And then once we can start making our own thesis, we can plug in a strategy. And that is going to slowly build your skill level when it comes to trading. So the game of money falls within the realm of human behavior and is a fundamentally impossible to predict completely. Professional advice is that the price movements in the market are always the most reliable reference. It is best to face the facts and react quickly, deciding on the direction of action. So speaking of which, there is something meaningful that everyone can see, even myself. With many years on Wall Street experience, fighting on the front line of trading year-round, I still cannot predict the market or stocks completely accurately. And even among the stocks I recommend, there are still a few that are currently experiencing small losses. Am I right? So despite how much experience you have, despite how much knowledge you have, if the market wants to go in a certain direction, just like our indexes right now, there's no negative news, but it wants to go down. It will go down. And this is unpredictable. Now, I can make trades within a specific period that is definitely going to make us money, but I cannot guarantee that every stock will be profitable. However, what I can tell you is that the stocks I recommend are relatively high quality and a lot of research has been done. Some stocks are just temporarily stuck, but they will be long-term bulls. Some things we do short, some things we're going to have to look long. One more thing. There is no need to worry at all about the issues of stock profitability. In the future, we will help you achieve more profits in our wealth growth plan. Additionally, I would like to tell you that making money in the stock market based on technical analysis is completely different from making money based on systems. Using asset management accounts to make money relies on systems. Now, the system is big corporations sitting down negotiating. These are systems, okay? Although the current profits are not very significant, our strength lies in stability. Through the accumulation of time, the advantages and power of its profits will eventually explode. So consistency is always going to be key. We keep it consistent, we keep it stable, as long as we're reaping in profits. So even if we were to gain 10% on a stock, then lose 7, then gain 10, then lose 7, we're gaining 3 every 2 transactions. That is a consistency gain. All right. So that's going to wrap up our Zerich Law speculations. Now we're going to be looking at some of the stocks that we recommended previously in our stock analysis. Now, going to be honest, due to the overall situation in the market, the vast majority of the stocks have not escaped the downturn. The stocks we recommended to everyone earlier have also experienced a significant decline. However, there's no need to worry. As long as you have incurred losses from following the stocks I recommended, you can register with my assistant. Now you ask, how do we register? You just register which stock you bought and how much we've lost. We will definitely help you make it back in our wealth growth plan. We were going to add that onto a percentage and we're going to help you make it back. By the way, I've mentioned yesterday for everyone to register with the assistant. Did everyone register? So some members have registered, some may not have not. It's okay. You can still register later as well. So let's go and dive into the stock analysis. Okay, so LT first. The stock LT had quite a significant drop today. It had a decrease of 6.06%. Now, why did this stock experience such a large decline today? Mainly because the company announced its performance data today. So is LT's performance data very poor? I don't think so. Its performance is just not as good as everyone imagined, or their expectations were not met, right? Coupled with the current overall bearish market situation, the stock price further declined. Now, as we mentioned before, will this stock completely turn into a bearish trend? I'm going to tell you it won't. At most, it would just be a brief adjustment like it is now. Now, for this stock, it's still advisable to hold on. Even if you want to sell, we don't want to be selling the stock at the support level. Now, on the contrary, from a trading strategy perspective, the support level is often a buying opportunity. It's just that the current overall market environment does not allow for that. So that doesn't mean we're going to go and add our positions in this stock. In the overall bearish market environment, we cannot change or alter it, but we can change ourselves. For example, recently we used block trading to invest in stocks. Isn't it also a way to make money? Sometimes changing the approach will open up new paths. So we can't be stuck on one stock all the time. We need to pivot and we need to find other ways to make money. Okay, so let's take a look at Capacite next. So similarly, the stock has adjusted today along with the overall market adjustment. When the market undergoes a significant adjustment, it is unavoidable that the majority of the stocks will decline. So, as I said earlier today, only 7 were in the green. The rest of the Nifty 50 was all in red. If it is periodical adjustment of the overall market, then even if a certain stock does not adjust for today, it's going to adjust tomorrow. So, technical perspective of this chart, the price of the stock has once again returned to below the high point in January of this year, re-entering the previous range of fluctuations. Now, frankly, the way the stock has been performing now, due to the steep short-term decline and rapid pace of decline, I personally believe that once the stock market presents a chance or an atmosphere for the rebound, this stock will exhibit a stronger uptrend of a rebound. It could even potentially pass its previous highs. Now, as mentioned earlier, recent overall market decline is caused by multiple factors, not just one. So therefore, engaging in trading with common stocks in the near term often results in more losses than it's going to come with gains. So I've said before, if you incur losses by buying stocks that we've recommended, just feel free to close your positions and approach the assistant for registering the loss. And I will make sure to coordinate uniformly to ensure that everyone's losses are 100% recovered. Okay, the last one that we're going to be going over is going to be JK Paper. So JK Paper Limited, a paper company that manufactures and sells branded paper, cultural paper, all sorts of paper. Now, although this company belongs to a traditional industry and is not a high-tech company, its financial performance is fantastic, and its price has undergone a significant adjustment in the past. Now, the valuation is relatively ideal. So since there's no problem with this stock, their performance has been doing well. Why did it drop today? Just like because the overall market declined today. So it's the same thing as all our other stocks. No bad news. They're doing fine. Profits are okay. Quarter after quarter, year after year, they're doing better than last year, but prices are still going down. So as everyone can see, how many stocks can truly escape the clutches of the market today? However, for all our members here, there's no need to worry. Why? Although it's only been a few trading days, the stability of earning and profits are quickly coming back through our block trading using asset management accounts. Now, is everybody still worried about not making back their money? So, yeah, actually, yesterday, a friend told me that although the stocks we recommended recently are temporarily trapped because we have long-term bullish views, as long as you follow all of our stock recommendations, the profits should far exceed the current level of troubled stocks. Now, of course, enough said about that. Today's sharing about stocks is going to end here. Next, I want to share the great news that I've been excited about all day with everyone now. Okay, so I am very happy and excited to make this announcement, okay? In the event held for the Asia Pacific headquarters, our support team has finally come first in rank. Now, ever since I received a call from the company headquarters at noon, I had a feeling that our support in India had surged. We were far away from first place, weren't we? Sure enough, after today's results were announced, we are in first place. Now, of course, first of all, I want to express my sincere thanks to everyone who supported us. Were you trying to surprise me? Was everybody holding out on me until the last minute? Well, you really did surprise me. Additionally, I need to explain one more thing to everyone. Although we have surpassed Hong Kong and secured first place, the difference in the number of votes is not significant, and the competition in the number of votes is not over yet. We still got one more day. We could be overtaken at any time, so I would like for all of us once again to keep voting for us tomorrow. We are leading the race. We haven't won yet, so we need to maintain our victory until the very end. As you all know, our team from India participated in the competition for the Asia Pacific headquarters location, and we are now in the final sprint. Since we have achieved good results, we must definitely maintain this until the very end. Honestly, this is what I truly see as India, the true strength of India. Now, although it may be too early to call it a success, I want to sincerely thank everyone here, regardless of the results. So on behalf of myself and all our members of Team India, I want to express the most sincere and thanks and deepest gratitude to all our friends and members who have supported us with their votes. Although the voting activity is not over yet, your support and trust makes me feel incredibly honored and moved. So once again, thanks everyone. We will continue to repay you with even higher quality of professionalism. That is going to wrap up our evening for tonight. So that's it. Please go over the contents again, memorize it, apply it to your real life trading strategies. And our next live broadcast is scheduled for this Sunday, May 12th at 8 p.m. Thank you. Congrats. Let's keep the momentum going. And I hope to see everyone here again on Sunday. Thank you very much for your strong support, and see you all next time.